All right, let's talk about NVIDIA. It is, without a doubt, one of the most watched stocks on the planet. And with its earnings report right around the corner, everybody's asking the same thing. What's next? So in this explainer, we're going to do something a little different. We're going to crack open a real technical analysis report to see how the experts are trying to read the tea leaves and figure out what might happen. Okay, let's get into it.
And this is the big question, right? The one on every single investor's mind. With that Q3 earnings report scheduled for November 19th, 2025, NVIDIA is really at a crossroads. The stakes? Incredibly high. The market is just holding its breath. Is this thing about to blast off to new highs, or are we looking at a potential pullback? So why all the drama? Why is this particular moment so critical? Well, it's because everyone is scrambling to get their bets in before the big announcement. You see, analysts are widely expecting what they call a beat and raise. That means they think NVIDIA will not only beat the earnings expectations, but also raise their guidance for the future. And the consensus is looking for, get this, a massive $57 billion in sales. So yeah, the pressure is definitely on. Now, before we start looking for clues about what's next, we gotta do what any good detective would do. We need to assess the scene. We have to gather the basic facts of the case first. This gives us our baseline, a quick snapshot of where NVIDIA is standing in the market right now. Okay, so what's the story here? Well, that current price, around 190, puts the stock smack dab in the middle of its 52-week range. And that beta of 1.45, what does that mean? It means this stock moves. It's about 45% more volatile than the market as a whole, so it can make some really big, sharp swings. But look at those analyst price targets. They're still really optimistic, aiming way above where the stock is today. And this chart really drives that point home, doesn't it? You can just see how much room this stock has to run in either direction. It's not scraping the bottom, but it's not at its peak either. This is pretty much the definition of a stock at a pivot point, like a coiled spring, just waiting for something to set it off. Okay, so the scene is set. Now it's time for the fun part. Let's put on our detective hats and start digging into the technical clues. These are the indicators analysts use to try and see past all the day-to-day noise and find real hints about where the price might be going. First up, a real classic, moving averages. So our first clue is going to come from moving averages. You know, think of it like this. If a stock's daily price is like a winding country road, a moving average is like looking at that same road from a helicopter. You don't see every little twist and turn, but you get a really clear picture of the overall direction it's heading. It helps you see the bigger trend.
And boom, right out of the gate, our investigation hits a snag. We've got conflicting evidence. In the short term, the averages are acting like a ceiling, what analysts call resistance, and it suggests the stock is struggling a bit right now. But the long-term averages, they're telling a completely different story. They're confirming a powerful, ongoing uptrend. So we've got short-term pain versus long-term strength. This is where it gets interesting.
Let's move to our next set of clues, oscillators. Now, the best way I've heard this explained is to think of it like the tachometer in your car. It doesn't tell you how fast you're going, but it tells you how hard the engine is working. It's all about momentum. These indicators help us see if a stock's recent moves are getting stronger or weaker, kind of warning us if it's getting too hot or overbought, or too cold, oversold. So what's the tachometer telling us for NVIDIA? Well, honestly, it's kind of just idling. Most of these key indicators are sitting right in neutral territory. They're not shouting buy and they're not shouting sell, but there's one little exception here. The MACD. It's showing something called a bearish divergence. In plain English, that means even though the stock price has been going up, the momentum behind those moves is actually getting weaker. It's a subtle clue, but it's an important warning sign.
Okay, let's step back for a second and look at what we've found. Our investigation has turned up a ton of conflicting clues, right? We've got short-term weakness, but long-term strength. We have momentum that looks neutral, but has this little bearish hint. This is exactly what technical analysis is all about. It's about weighing all these different signals to build a case for what might happen next.
And this slide, this is it. This is the whole case laid out for the jury. You've got the bull case versus the bear case. On one side, the bulls are pointing to that super strong long-term trend, the positive analyst ratings, and that great AI growth story. But on the other side, the bears are pointing to that immediate price resistance, that hint of weakness in the momentum, the high volatility, and other risks like competition. You've got two very compelling but totally opposite stories. So which one is going to win? So, with all this conflicting evidence, what does an analyst actually do? Well, they don't try to predict the future with a crystal ball. Instead, they use these clues to create a roadmap of possibilities based on key price levels. And the report we're looking at lays out three very distinct paths that NVIDIA could take.
So here they are. First, you have the bullish scenario. If the stock can punch through that resistance ceiling at about $201, then we might see it climb higher. Then there's the bearish scenario. If it falls below the support floor around $180, it could be in for more trouble. And the neutral path? Well, that's where the stock just keeps bouncing around where it is now, basically waiting for earnings to force its hand. These price levels, these are the lines in the sand you want to watch.
All right, we've looked at the scene, we've followed the clues, we've heard both sides of the story. Now it's time. Let's open the final page of this case file and see the analyst's official verdict based on everything we've just gone through.
And here's the key takeaway. It's not a simple buy or sell. It's way more nuanced than that. The analyst is basically saying the overall picture looks bullish, but, and this is a big but, you have to be cautious. The big picture looks great, but that high volatility and the risk of a volume trap, where a move looks good but then quickly reverses, means you absolutely have to be careful.
And then they take all of that complex analysis, all those charts, all those indicators, and boil it down to one single number, a technical score of 62.5. This is their way of quantifying the conclusion. It's a final verdict of mildly bullish. So it's not a screaming, table-pounding buy, but it does suggest that despite all the risks, the evidence just slightly favors the bulls. And that's really what this is all about. Technical analysis, at the end of the day, isn't a crystal ball. It's a roadmap. It shows you the key levels, the potential paths, and the balance of the evidence. So now, armed with this map, we can all watch what happens with the earnings report not just as spectators, but as informed observers. The only question left is, which path is the market going to choose?